Hey everybody, Chris Epp here with FourPoint. Thank you very much for joining us on our fourth and final vlog. Today I'm very excited to have industry veteran, my partner and long-term friend, Chris Bancroft, join us to talk to us about the investment sales market. Chris Bancroft, thank you very much for joining us today.
Thanks, Chris. Glad to be here.
I'm curious about the current state of affairs from your perspective. What does the next 12 months look like from an investment sales standpoint?
Great question. Timing for the next 12 months, I view as the kind of three distinct hurdles. We have now through this fall, fall 2020 through year end, and then spring of 2021. And each of those sections kind of has some unique attributes to it. But in terms of what needs to happen for deals to be bought and sold again, off-campus housing needs to continue to lease up for fall of 2020. Schools are going to need to reopen this fall for in-person classes or some sort of hybrid scenario, but school needs to be in session. And students then need to show up for school, right? And take occupancy of the beds that they leased, hopefully right now. And then financing with reasonable terms needs to reappear soon. So that's what needs to happen. And then as far as the types of deals that I'd expect to see between now and next year, I think you'll see one or two off-market deals with a bit of luck. You'll see some opportunities that were already in play or under contract. Same with deals that were perhaps in trouble pre-COVID-19, where owners overpaid or bought in markets with maybe some issues, and then COVID-19 sealed their fate. Those will transact. And then lastly, marketed and broker deals, perhaps a few this fall and certainly more next spring. But I think there's going to be some pent-up demand for deals on the tail end of the next 12 months.
So it sounds like a bit of a mixed bag, and I've heard the term Wild West from a lot of investors out there for the next 12 months. But let's zip forward a year from now. So we're in 2022. Talk to us about what types of deals we might see at that point.
By this point, I'd like to think that we're well on track to a normal investment market. It's going to be different. As far as types of deals, you're going to see the full range. The typical deal profiles broken out between distressed and stabilized. Distressed deals, I think you'll see a few of those deals that were in trouble pre-COVID-19. Those will get cleared out via the banks and the lenders and the special servicers. I don't think you're going to see a ton of distress by way of the pandemic itself, except for, if there's certain schools that don't reopen, or if there's certain restrictions in place that cause unforeseen changes to housing and living requirements that might cause a drop in occupancy. Those types of issues might cause problems, but the fundamentals of student housing were very good going into COVID-19. And yes, we're in a peak market, and yes, we're overdue for a correction, but students still need a place to live, and the student industry was doing well, and I think that's still going to be the case going forward. For stabilized deals, I think you'll see a lot of markets and deals benefit from improving fundamentals and pent-up investor demand. And then as far as financing, I'd like to think that we're back on track or getting close to it. Obviously, the 18-month interest reserve by the agencies are not conducive to buying real estate, so we'll need to see terms like that go to the wayside.
So talk to us about 2023 and onward.
Sure thing. So now we're talking 3 years out. This is 2022 and 2023. So COVID-19 is always going to be the back of everyone's mind. Even if we have a vaccine or a cure, I think this is going to be something that's not quickly forgotten. And what the post-COVID-19 student housing world looks like is anyone's guess, but this is my thought, and my thought alone. In terms of product type changes, you hear the word de-densify, and I think that's going to be the overriding theme for student housing going forward, meaning lower density student housing is going to be in the 1 and 2 bedrooms are going to be prioritized over the 4 bedrooms and 5 bedrooms. Value add programs are going to take COVID-19 concerns into consideration. So you're going to see upgrades being offered that really help solve for health concerns. Bed Bath Parity becomes maybe mandatory now. And you'll see certain deals perform better than others just based on those attributes. As far as development, you're going to start to see the first wave of deals being delivered. So the investment profile, I would envision being somewhat similar to what it's been historically, but it's as it always has been in student housing, somewhat of a revolving door, for lack of a better word. In terms of cap rates, I would expect to see upward pressure on cap rates this fall. We're seeing it now. I don't know how long that lasts and what that looks like longer term. my thought is that in 3 years from now, we're back to a competitive and normal investment market. So I would envision caps being somewhere to what they were 6 months ago. All this is speculative. Big picture, I'm really optimistic that student housing will come out of this crisis in a very positive light. As I mentioned, and as you know, the fundamentals of the industry were very sound going into the pandemic, and that hasn't changed.
Chris Bancroft, my long-term partner and good friend. Thank you, everybody, very much for joining us on these vlog series casts. We really appreciate all the kind words and feedback that you've given us. We look forward to getting out of the rut with you here and seeing you at the next industry event. Thank you very much.